CBDCs, stablecoins, Bitcoin, Ethereum, XRP. What's the difference? More importantly, who controls them? Most people don't know what's going on with digital currency right now. Governments wanted one thing, the public said no. So now they're going to try something different, and most people won't see it coming. Let's break it down. Welcome back to Decoded with Laura. Quick heads up before we get into this is going to be an overview. There is way more depth to all of this. The geopolitics, the technical details, the regulatory battles happening right now. Think of this as Digital Currency 101. I'm going to give you the framework you need to understand what's happening. If you want me to go deeper on any of this, just let me know in the comments. All right, let's start with what the governments have been trying to build. CBDCs, central bank digital currencies. Governments around the world are working on these right now. And before we talk about why they are struggling, we need to understand why they want them in the first place. Here's the official story. Banking the unbanked, faster payments, lower cost, fighting crime and money laundering. All sounds reasonable, right? But here is what they are not saying out loud. They want to see every single transaction you make. They want the ability to freeze your money instantly. They want to program what you can and can't buy. They want to track everything in real time. And I'm not exaggerating. Here's what that actually could look like in practice. Your money could expire. Spend it by Friday or it disappears. That forces you to consume instead of save. You might not be able to buy certain things. No guns, no gas on Thursdays, carbon spending caps. They get to decide what you're allowed to purchase. And your money might only work in certain places with geographic restrictions. They could implement negative interest rates. Your savings could shrink automatically. And you can't pull cash out because they've eliminated that option. Now, this is not conspiracy theory stuff. This is literally in their white papers, their pilot programs. These are features they are discussing openly. So with all that said, let's talk about what is actually happening right now with CBDCs. China launched their digital yuan back in 2019. That is 5 years ago. Guess what? Almost nobody is using it. Most Chinese citizens still prefer to use WeChat, Alipay, the systems they already know and trust. The government keeps giving away free digital yuan just to get people to try it, and it's still not working. Then you've got Nigeria. They launched the digital eNaira in 2021, and it was a total disaster. Confusing interface, technical problems, and most importantly, people didn't trust it. The adoption rate, under 0.5% of the population. The Bahamas launched their very cutely named Sand Dollar. This is one of the first CBDCs anywhere, and barely anybody uses it. So why are they all struggling? First, they're clunky. The user experience is terrible. People don't understand how to use them. And more importantly, why would you switch from something that already works? Second, people don't actually want this. Privacy advocates have been screaming about it, and regular people are just uncomfortable with the idea. Third thing, trust. This is the big one. Would you want your government to have the power to turn off your money? One click and you can't buy food. No trial, no appeal, just done. Most people hear that and they say, absolutely not. So CBDCs are not dead. The US has programs running. Europe does, the UK, lots of countries are still working on them, but they are limping along, struggling, and facing massive resistance everywhere they try to launch. Which brings us to a new strategy, and this is where it gets interesting. Stablecoins. This is what you really need to pay attention to. So, what are they? They are digital tokens that are pegged to $1. One token equals $1. Companies like Circle and Tether issue them. And here's how it works. They hold reserves. And this is important. It's not just cash sitting in a vault. They treasury bonds, for example. That's most of USDC's reserves. Cash equivalents, sometimes precious metals, and other short-term investments. So they are investing your dollars while you hold their tokens. They're making money off of you, just so you know. And here's the thing. Stablecoins are actually useful, like genuinely. You can send money across the world in minutes instead of days, way cheaper than Western Union or wire transfers. You can trade between cryptocurrencies without the price swinging all over the place. Businesses can accept crypto payments without worrying about the value dropping overnight. And people are using them. There's over $150 billion worth of stablecoins in circulation right now. Tether, that's the big one, sits at around 140 billion. USDC is second at about 50 billion, and it's growing fast. So, why am I telling you to pay attention to this? Because here is what's happening behind the scenes. CBDCs are struggling. People rejected them. It's too much obvious government control. So, governments and banks are switching strategies. JP Morgan already has JPM coin for their institutional clients. PayPal launched their own stablecoin, and banks are lining up to create their own versions. And governments, they are writing stablecoin regulations right now. Here's the thing you need to understand. They can regulate stablecoins to do everything CBDCs were supposed to do. Let me give you a real example. In 2022, Circle, the company behind USDC, froze wallets that were linked to Tornado Cash. Why? Because the US Treasury Department told them to. That's it. No trial, no appeal, no due process, just frozen. So imagine this playing out. Governments require stablecoin companies to track every transaction, report everything to authorities, freeze accounts on command, share all your data. You end up in the exact same place as CBDCs. Same control, same surveillance, just different branding. And here is why this is the Trojan horse. People said no to CBDCs. It was too obvious. Government control right in your face. But stablecoins, they are convenient. They work. They're useful, and they feel like a private sector solution. People will adopt them willingly without realizing what's happening. The public says, we don't want government CBDCs. And the government says, fine, use these heavily regulated private stablecoins instead. Same outcome, just better marketing. Now listen, I am not saying to never use stablecoins. I use them myself for certain things. They are useful tools, but you need to understand what's coming. This is likely how digital currency control gets implemented in the real world. Not through CBDCs that everybody rejected, through regulated stablecoins that everybody adopts because they're convenient. Same control, different package. Okay, so that is CBDCs and stablecoins. Now let's talk about actual cryptocurrencies and how they're all different. So what about actual cryptocurrencies, the decentralized ones? Different tools, different purposes, different levels of control. I'm going to walk you through some of the main ones, starting with Bitcoin. Bitcoin is the most decentralized network that exists, period. No company controlling it, no CEO you can pressure, and no founder you can arrest. Satoshi got out of here years ago. It's a fixed supply, 21 million Bitcoin ever. That's it. You can't create anymore. Now, the base layer is slower, about 10 minutes per block, and fees can spike when the network gets busy. But here's what most people don't know about the Lightning Network. It's a layer 2 solution built on top of Bitcoin. Instant payments, fractions of a penny in fees, and can handle millions of transactions per second. Think of it like this. Bitcoin's base layer is like the reserve, settling big transactions. Lightning is like Visa or MasterCard, handling everyday purchases. And it's already live and working. El Salvador runs on Lightning. Bitcoin Beach does. Businesses around the world are using it. So if you're worried about protecting wealth from government control, Bitcoin is the answer. If you want to make payments that nobody can censor or block, same answer. Now, let's talk about something a little different. Ethereum. ETH isn't trying to be money exactly like Bitcoin is. It is programmable blockchain. You can actually build applications on top of it. It introduced smart contracts, basically self-executing code. No middleman needed to enforce the agreement. And that's what enables all the DeFi stuff. NFTs, decentralized exchanges, all of that, for the most part, runs on Ethereum. The problem with Ethereum, fees on the base layer can get absolutely insane. Sometimes $50 for a transaction, sometimes $100. But just like Bitcoin has Lightning, Ethereum has its own layer 2 solutions. Arbitrum, Optimism, Polygon, Base. Same security as the main ETH network, just way cheaper. We're talking cents instead of dollars. Much faster too. And most of the DeFi activity is moving to these layer 2s now. Businesses are building real things on Ethereum. Uniswap does billions of dollars in trading volume. Aave and Compound are major lending platforms. Even USDC, that stablecoin we talked about earlier, actually runs on Ethereum. Companies are using it for supply chain tracking, tokenized real estate, gaming platforms, real applications. So if you want to build something decentralized, if you need smart contracts for your project, if you want programmable money, Ethereum is the established platform for that. Now, XRP is a completely different animal. This one was built for banks from the very beginning. It is all about speed for cross border payments. That's the whole purpose. Settlement time? 3 to 5 seconds. Compare that to Bitcoin's 10 minutes or traditional banking's 3 to 5 days. Cost per transaction? Fractions of a penny. Ripple, the company behind XRP, has banking partnerships all over the world. They're literally trying to replace SWIFT. That's the system banks use right now for international transfers. But here's the catch. It's more centralized than Bitcoin or ETH. Ripple Labs, the company, has real influence over the network. This wasn't designed for individual freedom or sovereignty. It was designed for institutions to move money quickly and cheaply. And banks are actually using it for international transfers, for settlements between institutions. So if you're asking which cryptocurrency makes sense for a bank to use, this is the one. It is literally purpose-built for that. Let me touch on a couple others real quick, like Solana. Solana is all about raw speed, thousands of transactions per second and very low fees. It's got a growing DeFi ecosystem. NFT platforms, gaming applications are being built on it. The trade-off? It is more centralized than Bitcoin or Ethereum. The network has also had outages before. And it takes more powerful hardware to run a node. But that combination of speed and low cost makes it really attractive for certain cases. High frequency trading, NFT marketplaces where you're doing tons of small transactions. And then you've got projects like Cardano, which takes this very academic approach to everything. All their development is peer reviewed. It is slower, but super methodical. Or you've got Polygon. That's an Ethereum layer 2 that's become widely adopted. Point is, they all make different trade-offs between speed, cost, decentralization, and features. So here's what it comes down to. What problem are you trying to solve? Are you worried about government control and want to protect your savings? Bitcoin, and use Lightning when you want to spend it. If you want to build decentralized applications or need smart contract functionality, Ethereum, and use layer 2s so you're not paying those crazy fees. And if you're running a bank that needs international settlements quickly, XRP was literally designed for that purpose. If you need high-speed DeFi capabilities, Solana or Polygon might be your answer. Different tools for different jobs. The key is understanding what each one actually does and being honest about the trade-offs you're making. Which brings me to how all of this fits together on the spectrum of control. So let's zoom out and look at the big picture. Here's how to think about the spectrum of control. On one end, you've got CBDCs, total government control. Every transaction tracked, can be programmed, can be frozen instantly. Then you've got heavily regulated stablecoins. Companies technically control them, but those companies answer to governments. Still centralized, still can be frozen on command. Moving further along, you've got cryptocurrencies that have companies or foundations behind them, like XRP or Solana. They're faster and cheaper, but they're more centralized, more control points. Then there's Ethereum. There is a foundation with Ethereum, but it's really a community that governs it, much more decentralized, no single point of control. And on the far, far end, Bitcoin. No company, no CEO, no founder, no single point of failure, and can't be shut down. So you pick based on what matters to you. If your main concern is freedom from control, you want more decentralized options. If your main concern is speed and features, you might accept some centralization to get that. If you're building a business, you might need smart contract functionality regardless of the trade-offs. The point is to know the trade-offs and make informed decisions. I focus on Bitcoin on this channel because I believe decentralization and freedom from control matter most when it comes to protecting wealth. But I'm not going to sit here and tell you that ETH is a scam or XRP is worthless. That is tribal nonsense. Use Bitcoin for savings and sovereignty. Use Lightning for everyday payments. Use ETH if you're building decentralized apps. Use stablecoins if you need to move money quickly. Just understand that they are not decentralized and they can be controlled. Just know what you're getting with each one. All right, let's wrap this up. That's the overview. If you want me to go deeper on any of this, CBDCs, stablecoins, layer 2s, or specific cryptos, let me know in the comments. If this helped you understand what's actually happening with digital currencies, hit that like and subscribe. Thanks for watching, and I'll see you in the next one.